Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network. Before we get into today's show, there are a few things we have to go over. Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program. Welcome back to episode 3 of our ETF mini-series. Kate Campbell.
Good to be back, Owen.
Monique, Mini Pizza.
Hello.
Welcome. Okay, so today we're going to talk about how to research and compare ETFs. And as we'll just talk about, there are a lot of different ways to do it. So we're going to talk about all the different, types of ETFs that you can think of, but also just some very basic ways to go about researching. And this is a good activity to do yourself using the Google Doc.
Yeah, because there's over 200 ETFs listed on the Australian Stock Exchange. So, Monique, that sounds like a lot to choose from.
Where do you start?
Yes. Well, we've got this workbook that Kate's put together, which will help us kind of just have a checklist of items and go through and kind of just reflect on some of the things that we mentioned in episodes 1 and 2 of this mini-series. So if you haven't already, please rewind, go back 2 episodes and start at the beginning of our ETF mini-series, because this will make a lot more sense.
Yeah, and you're going to need the checklist and the Google Doc that we've got in the show notes. If you haven't looked at that already, you're going to need that for today's episode because it's kind of a worksheet and a pause as you go kind of episode, so you can work through everything we're talking about. And we're going to be covering ETF providers, we're going to be talking about dividends, we're going to be talking about actually finding out what the ETF actually invests in and some of their holdings, so you know what you're actually getting in your box.
Nice.
And even just how does the ETF compare to others, because you might have gone, I want to invest in Australian shares, but there's lots of different options as we'll get into today's episode, and it can be a bit overwhelming on how do you actually narrow that down into something that you want to invest in. So we'll talk about comparing fees, indexes, track record and performance, and just knowing a bit more about the ETFs we want to invest in.
Perfect.
Yeah. So as we're about to find out, there's a lot of ETFs in Australia, Monique.
Yeah.
And so we're going to try and just stick with the Australian shares at the moment. So we're going to narrow it down to just ETFs that invest in shares of Australian companies.
Beautiful. Keep it simple, please.
Yeah, so something that you could put in the core of your portfolio.
Okay.
Yeah. Just like we mentioned your IOZ ETF.
Yep.
That's actually one that's on the list.
Oh, beautiful.
So of the 5 that we've kind of identified here, that's one of them. We've got, and I'm just naming them by ticker symbol, which is like a barcode for an investment. We've got A200, STW, VAS, IOZ, and MVW. 2 of these are not like the others. 2 of these being, which we can discover throughout this session, one of them invests in more and one of them invests in less than 200. So that's probably the key difference between some of these. Kate, where do you want to start?
Yeah, I think we're just going to narrow today's episode onto Australian ETFs and Australian shares. And even then, there's a lot of other options. Like you can just invest in an ETF that invests in the top 20 Australian companies. So we're going to be looking at ETFs that are around the top 200, but give or take with a couple of them, as Owen mentioned. So I think the most important thing to have open now, if you are reading along, if you're on the computer right now or on your phone, that Google Doc we mentioned in the show notes, because this is going to form a part of the research activity, because the research activity actually involves you doing some research, which is really important on your investing journey.
Yeah, so we'll try and speak it out. If you're just listening passively, you can do this and then come back to it later. But the Google Doc will make sense. It's got a table. Across the top, we have all of the 5 ETFs that we want to look at. Down the left-hand side, we've got things like the Etf Provider, the date that the fund was started or the ETF was started, the fees, the index, the track record, how much money is in it, otherwise known as assets under management or FUM, AUM, whatever. The yield, so this is what we talk about, like how much you get returned to you, the top 10 holdings, and then where to find the PDS. So all of this is available on the ETF Provider's website. So you can go in there and you can look at each one and you can see how has it performed. You can see what it's invested in, so on and so forth. So Monique, I'm going to slide this across so you can see what we're talking about. And we can see here on BetaShares website, we've got A200.
Yep.
And it's just like a standard page.
Nice.
So Kate, where should we begin?
Yeah, I think I really just want to talk you through each of these comparison points so you know why we're looking at it, why it matters to us at all, and why we're using it as a point of comparison.
Mm-hmm.
And so that when you work through this document and you've got all of the 5 ETFs we're talking about today side by side, you can actually make some sense of this information, because knowing the management fee is all good and well, but if you don't know what that actually means or why it's worth comparing, then it doesn't really help that you know that information. So we're collecting information, but we also want to learn how to interpret it and make a decision out of it.
Yeah.
Cool. Okay, how about, could we go through maybe, I don't know, A200 and IOZ as an example? So because IOZ's the one that Monique owns, and maybe we can go through the list.
Yeah. So the first thing on our list is knowing the Etf Provider. So now we've narrowed it down to 5 ETFs because we really want to invest in something in Australia. We want to get access to those top 200 or so companies, and we want to put that in our core. We want to narrow down in terms of these ETFs. So knowing the provider is important because you want to know who's running the ETF and who's looking after it. If you have any issues, if you want to find more information, you know the website to go to.
Nice.
So for the A200 ETF, it's run by BetaShares. Now, if you didn't know that, how would you find that information? So we've put a link in there to the website, but you can always just Google the ticker code or the barcode, as Owen said, and just write in A200 ETF or A200 ASX, and you'll be able to find more information on either the ASX website. So our stock exchange has a pretty detailed website with a lot of data, so you can search any investment up there, or you can look directly on the BetaShares website for the information on A200.
Okay.
So a dead giveaway, Monique, is let's say if we search for A200, and I'll put in A200 space ETF.
Straight in Google.
Straight in Google. So we can see here it's come up with an ad from BetaShares, but the first thing that's come up is the BetaShares website, and it's got Australia 200 ETF. If we scroll down, we see one for Market Index, which says BetaShares Australia 200 ETF.
Yep.
Best ETFs, BetaShares Australia 200, and then the list goes on, the ASX website.
All right.
A dead giveaway, when you look at the name of an ETF, is the first name that comes up is typically the ETF issuer.
Okay.
So in this case, it's the BetaShares Australia 200.
Yeah.
Now let's do the same thing, but we'll do it with IOZ ETF in Google. What's the first part of the name?
iShares.
iShares. So that's the ETF provider, iShares.
Nice.
So iShares, in this case, it's actually part of a company called BlackRock, but for its ETF division is called iShares.
Okay.
So that's one of the big ones.
Right.
Alongside BetaShares, alongside Vanguard.
Okay.
Yeah.
So a bit confusing. Why is like iShares part of BlackRock? Why are there two different names there?
It's just because they didn't start out just doing ETFs. They started out doing other stuff.
Okay.
So I would guess, I don't know the answer to this, Kate. I don't know if you do, but iShares, I'd guess this is around the time maybe it was a naming convention when everything was like iPod, iPhone. I don't know. Maybe it's because as an individual investor, I invest in shares. I don't know. Do you know?
No, but some of them have different names, or in Australia, they'll have a different name to what it is in the US, but it's a subsidiary company. So like some of the big names in Australia that you're going to see pop up, especially during this research activity, are Vanguard, BetaShares, Spider, State Street, iShares with BlackRock, VanEck, and ETF Securities /Global X.
Yeah. Okay. So you'll see these names appear. So Kate, you mentioned inception date, which is the second thing on our list. Why? And where do I find this?
Okay, so you want to know this by whether you're on the ASX website or the BetaShares or the provider's website. You can Control F and it will probably say inception date somewhere or start date or something like this, because it's good for you to know how long that ETF's been around for.
Yep.
Especially because this is going to be a core of your ETF. It's going to be a long-term position. You want to know they've got a track record. They've been running the show for a while.
Okay. So basically it's better to have them going for a longer amount of time?
Yeah. We were talking about 3+ years before. Yeah. Sometimes there's newer products that might be more suitable on the market, but it just gives them time to make sure it's iron out any kinks. It's all good to go. It's been around for a while. It's going to be around for a while.
Would there be any case where you would want to buy a new one?
So when we talk about those thematic ETFs that are going on the satellite part of your portfolio, sometimes there might be something really new and hot on the market that's investing in cybersecurity or robotics or hydrogen energy. And that's a brand new product. Nothing else in Australia exists. And you really want that. Then maybe you're buying something that's only been on the market for a few days. And so that might be a case where you invest in something with no track record, no performance history. You just go straight in. But the good thing is if they have an inception date that's further in the past, you've got more of a track record that you can see how this ETF has performed over time.
Okay.
Yeah, so here you can see on the BetaShares website, did what Kate said.
Yep.
Control F, search for Incept, and I can see that the date here is 2018, so that's the year for the A200. And then with the iShares one, it doesn't actually say the date on the page. You actually have to click on the chart, and then it shows you what's the maximum date. It's already set to 2010. Okay, so Kate, BetaShares A200 has been around since 2018, and the IOZ ETF from iShares has been around since 2010.
Yeah, so I think for both, decent amount of time, you've got a track record, you can go and have a look at all that information.
Okay, cool. When you say track record, what do you mean?
So I'm jumping ahead a bit, but I'm talking about performance and how the ETF has performed over time and if it's done what it's... So they set out the rule, we want to invest in this. Has it done what it's supposed to do over...
How do you know what's good and bad in the performance?
So when you have a look at the performance chart of the ETF, you can have a look at how it has... I don't know if Owen's got that up on the screen there, but you can have a look at how the ETF has performed over time. And something we'll also get to is the index of the ETF. So that's what its job is to do. And you can see how the index has performed and if the ETF has done a similar job.
So you can see at the top here, Monique, on the A200 page, it says A200 aims to track the performance of an index before fees and expenses, comprising 200 of the largest companies. And then if you go to the iShares website and we go to the top, it will say the same thing. It just uses the fund, aims to provide investors with the performance of the S&P ASX 200 index before fees and expenses. So this is the top 200.
Okay.
So you can see here that iShares is the top 200, but so is BetaShares.
Yeah.
So they're doing the same thing, basically. They might track a different index. So if we scroll down and we can see the index from BetaShares is this one.
Okay.
So that's a selective ASX Australia 200. And so we can put that under index in here. And then we can do the same thing. And I'll just make sure it doesn't carry any formatting. We can do the same thing for iShares and we can look at the index. And we can see that here is the ASX 200.
Okay.
Just like that, right? So far so good, Kate. We've got iShares and we've got the index from BetaShares. Now, maybe while we're here, we look at track record really quickly.
Yeah.
Is that something that okay.
Yep. So you can have a look at, it'll often be called the performance chart or the performance table, something like that on the Etf Provider's website. And it'll probably be a graph that sort of starts low and ends up high. There'll be a few jumps up and down along the way. And so you can have a look at that. And then probably the thing I usually have a look at is the percentages.
Yep.
So the chart looks nice, but you kind of want to find out what those numbers actually mean because charts can be a bit misleading. So I'm just looking at the A200 ETF here. You can see what the 3-year, the 1-year, the 6-month performance figures are and also what the index figures are. And you can see that it has it is slightly lower than the index and that's generally because of the fees.
Yeah.
Cool.
So Kate, just here we can see on the BetaShares website, because it only started in 2018, it's got a 3-year track record, but it does not have a 5-year track record for the fund.
Okay. So there's nothing there.
Yeah, so that's why I've just kept it blank. Whereas the iShares one does have that. If you have the option of 3, 5, or 10 years, is there one that's better? Like which one should you be looking at? Or
because you're also going to be investing for a long period of time, you want to look at the longest track record that you possibly can. So I would opt for the all-time or the 10 years if you can, because you're not wanting to make a decision in what happened in the last month or 6 months, because a lot changes in a 1 or 3 or 6 month time frame, but you want to know what does this ETF do if you give it long enough to do its thing.
Right.
Is it okay, Kate, because I've only got 3 years for beta shares, could I just compare the beta shares 3 years with the iShares 3 years?
So I'm having a look at the index here if you want to know what the 5-year for the
Yeah,
beta
sure.
shares product is. I think it's also different because they all started on different dates, and so it won't line up exactly. So if you look at their 3 years versus that 3 years, and it's often as of different dates, so it can be a little bit harder. So sometimes we like to look at the since inception numbers to see what's the average performance per year since inception if someone had invested at the very start and held since that time.
Okay.
So here we can see on BetaShares website, it says 31 August.
Yep.
And then we can see on the iShares website, it's got till 31 August.
Okay.
So you just need to be careful because sometimes they can go out of date by, when I say out of date, it can be like a month back.
Yeah.
Can be a bit longer
So
sometimes.
it's not that current.
Yeah. So what I would do is I would look at the same period. So to try and even out some of those things that Kate's referring to is try and look at the same period. So in this case, we've got 5-year and 10-year with iShares. So I would try and compare that as best I could to what I've got available from here. So we can see 8.35% for the 5-year from BetaShares. And with iShares, we've got about 8%.
Okay.
So a little bit less, but you'd expect them to be very close because
Okay.
they do pretty much exactly the
They're
same
pretty
thing.
similar.
Yeah. So the big difference is probably fees.
Yep.
So a lot of the times when one does slightly better than the other, it's because one charges slightly less fees. And over a year, that doesn't seem like such a big deal. Like what's the difference between 0.1% and 0.2%? It doesn't seem like a lot, right?
Yeah.
But if you do that every year for 5 years, then all of a sudden, that's a big difference.
Yeah, that adds up.
Yeah. So that's where the things that's
Okay.
where fees are important, right?
Yeah.
So I'll paste this into the document, and anyone that's listening can go into the document and have a look because we've pre-filled these two for you, so you can have a look and you can see what we've got in the thing. So what's next, Kate? We've got like assets under management or AUM. Oh no, so we've got management fees. We've glazed over that bit.
So management fees is what you're paying the ETF provider. So the person who's looking after the ETF, like BlackRock, iShares, like BetaShares, this is the fee they take out to look after that ETF and
Right.
manage it and put companies in, pull companies out, deal with all the tax stuff. Like they do all of that and they take a fee. And so when you go to each of the providers' website, when you go through this comparison table, you want to search for your control Fing something about costs or fees, because even I'm looking at their website, they use an acronym MGMT for management. So looking for words like costs, fees, something, and you might see P.A per annum, which is fancy way of saying per year.
Yep.
So that is you want to find this percentage. So for the A200 ETF, it's 0.07%.
Okay.
So that is the fees they're taking out per year.
Yeah.
But it's not taken out all at the end of the
Right.
year. It's usually done on a daily basis. They're taking out tiny amounts on a regular basis so that you're up to date. Whenever you sell that ETF, your fees are all paid up to date and
Nice.
they do not send you an invoice. It's all done automatically.
Yeah. So that all happens in the background. You don't have to worry about it.
Yeah. So the
Cool.
biggest thing we're looking for is low management fees. And with these kind of ETFs, we talked about 0.5% before, but a lot of the Australian shares ETFs are a lot lower than that now because there's a competition.
Yeah. So you can see here the management fee for iShares.
Yep.
0.09%. Sometimes they're expressed differently, as Kate said. So some might say management fees, some might say cost. It's important, like they're not always using the same language.
Yeah.
They roughly are, but sometimes there might be minor differences either side.
Okay.
So like this one might be a little bit higher once you include some costs to go along with it.
Right.
But again, like very low cost, as Kate said, for this type of thing that we're looking at. Okay, Kate, so we've got low fees on both of these. Like A200 is 0.07, IOZ is 0.09, according to their websites. Now let's look at this assets under management thing. How do we find that and why does it matter?
Yeah, so the assets under management, AUM, is how big the ETF is and really how many other people have invested money. Not by number, but by the dollar value invested in this. And so you want to search for things on the website like net assets or funds under management. Again, they're using different terminology here and switching it up a bit, but you can find this generally on the ETF Provider's website and generally on the ASX website as well. It might be under the words market cap also, because that's a term we use when it comes to investing in companies a lot. So you want to find out how big it is, and that sort of gives you an indication that, oh, geez, there's a lot of people that are using this ETF. It's probably quite efficient for the company to run. It's probably going to be around for quite a while longer because it's worthwhile for them to run.
Okay.
So here, Monique, you can see this number.
Yep.
Looks massive, doesn't it?
That's a really big number.
Yeah.
What are we, 2 trillion there?
You got
2 billion.
you've got 2 billion with A200. You've got 2.47 billion, and with iShares you've got 3.4 billion.
Wow.
So, do you have any questions about what those numbers mean?
Is the bigger the number, the better it is?
Yes, I mean, to an extent, that tells you this number, net assets, market cap, FUM, AUM, whatever they want to call it, this number tells you how much other people have invested into it.
Okay.
So let's say you put $100 into this one, and then you kept it in there and it grew to $120.
Yeah.
You would have $120 of whatever's in there. And
Okay,
so
so
your
that gets
investment's in there.
included
Yeah.
into that number.
My number would be in there, Kate's number, and all of it would be in there. And the idea is that it's not necessarily like bigger is always better. It's just more to say, okay, it's pretty validated. Like other investors are using this. And what that means is that the company that runs it, BetaShares or iShares, they're not going to close it down if everyone's using it.
Right.
So because they're making money from it.
Yeah.
So, you know how we said before that the fees are very low?
Yeah.
The reason that the fees can be very low is because there's so much damn money in it.
Okay.
Because if you think about it, if it's a big pile of money, you
Yeah.
only need to take a tiny little bit every year to make it worthwhile.
Yeah, that makes sense.
So I'll just put them in the doc now.
So this is probably a little bit less important when we're looking at these 5 ETFs in the document, but there are some thematic ETFs like we mentioned, or very niche ETFs run by providers that might be a little bit smaller, that only have $10 or $20 million invested in them.
Right.
And the worry is that you can't make much money out of running an ETF that small.
Yeah.
That's a very small investment fund. So
would those management fees be higher because there's less money there?
often the management fees are higher, but often they don't stay around for that long because they just can't find product market fit. They can't find enough people that want to invest in their products. So they go after 5 years, oh, we gave that a go. We're going to just like quietly shut that one down and try something different. And so you don't really want to go through that hassle as a long-term investor. You want to find something that you can put in the core of your portfolio and leave there for over 10 years.
Right. Yeah.
That's a good way of thinking about like product market fit. These ETFs are financial products. So if they put it out in the market and not enough people invest in it, then they're going to take it back and they're like, okay, we're going to close it down.
Okay. And that's just a bit annoying for you because then like you have to sell it. Is that right?
Exactly. And when you sell an ETF, you incur tax.
Yeah. Okay.
Like you will then there's a tax bill that goes along with it.
Yeah. And that's just annoying.
Yeah. Okay. So
Not every product's it.
no,
Same
that's
with
it.
financial products.
So Kate, then this is the one thing on this list which will confuse people, which is distribution yield. You'll see this thing written on websites and it's not really like always the same.
Yeah.
So what does it mean?
Yes. So in Australia, it's very common for a lot of the big companies like Telstra and BHP and CBA Bank to actually pay out some of the hundreds of millions, billions of dollars they earn each year in dividends. So they're paying part of it instead of reinvesting all of it into growing the business. They pay some of it to shareholders.
Okay.
And shareholders love them for it, especially retirees in Australia love getting dividends. And so what happens, a lot of these companies pay out quite a lot of money every year, maybe on a annual or twice a year basis. And so what happens, instead of getting it directly from the individual companies, which you would if you owned individual shares of CBA or individual shares of BHP, all of this money, because you're investing in Australian companies, gets sent into the basket. The ETF provider collects it all, and then they send it out based off how many units you own in the ETF. They distribute it to the shareholders.
And so Australian shares like these ones and these ETFs that we're talking about, they tend to be a favourite for people that do like dividends because Australian companies tend to pay more dividends than international companies.
Why is that?
That's a good question. It's because our tax rules are a bit more lenient here. In Australia, you can actually pay dividends and it can come with something called franking credits. We don't need to necessarily get into that now, but it's like a tax credit.
Okay.
So you compare that to the United States where you don't get a tax credit.
Okay.
So that's why Australian companies are like, hey, the tax environment's pretty good. Let's give more of our profit back to our shareholders.
All right.
And then you can do whatever you want with it. You can keep investing or you can invest in something else.
Cool.
So on the webpage, when you get to the ETF provider's webpage, you want to do probably Command F and search for yield. And then here you can see on the iShares website, it says 5.7%. On the BetaShares website, it's got a bunch of different numbers. It says 6.3% for 12 month. It's got then gross distribution yield, which includes the franking credits that I just mentioned, 8.2%. And you want to focus on the one without the franking credits. You just want to compare apples to apples.
Yep.
So it's 6.3% for A200. And what did I say? iShares 5.7%.
Okay.
Now, over time, there shouldn't really be much of a difference because they both invest in the same thing, as we're about to find out.
Okay.
But you can see here that one of them is from the 9th of September and the other one's from the 31st of August.
Okay. So a little bit different.
A little bit different. And that could explain why there's slight differences in yield.
Yeah.
So you probably don't want to say, this one's fractionally higher, therefore I'm going to invest in this one.
Yeah.
You just want
different times.
You just want to know roughly
Yeah.
what's going on. You can actually see on the BetaShares website here, you can see a distribution frequency. It says quarterly.
Yep.
Do you want to have a guess at what that means?
Like that's when you get it every quarter.
Yeah, exactly. You get it every quarter, and you can see it. Well, it doesn't actually say it right here, but it says here distribution frequency on iShares quarterly.
Cool.
So every quarter, you can expect something to be paid back to you.
Yeah. Nice.
Yeah, they pay out everything that they've collected during that quarter.
Yeah.
So sometimes some quarters are a lot less because the companies haven't paid many dividends that quarter, and sometimes it's a lot more.
Yeah.
And companies can cut their dividends or reduce it. This happened during COVID. So this can fluctuate, but it's a good number to look at if this is something that matters to you. And it matters to many investors
Yep.
how much income they can get from an
Yeah.
ETF.
So you shouldn't really expect the same amount every quarter.
No, exactly right, Monique. So if you go onto the pages, you can actually see what their historical yields were. Let's see where we've got this. We've got it's easier to find on BetaShares. You can see it here.
Okay.
So these are like the recent distributions, but it shows you there was one in July,
Yep.
there was one in April, January, October. Like these are when they were paying them,
Right.
and you can see that over that time, they calculated the annual amount for you at that time. So
Okay.
on that day that they paid it, what was the annual yield equivalent?
Okay.
5.6%, 3.9, 3.7, 3.5. So you can see it's always something. It's very high at the moment compared to where it was a few years ago.
Mm-hmm.
But you can see that it's good.
Yeah. Cool.
You can expect something.
Yeah.
Yeah.
Yeah. That makes sense.
Yeah. But it's not, like you said, it's going to fluctuate.
Yeah. Cool.
Cool, Kate. So two more things we've got here. One is maybe we can deal with the last one first, which is just like there's this thing called a fact sheet or a PDS. Where do we find that?
Yeah, so first port of call generally would be the ETF provider's website. So going to iShares or Vanguard or
Whoever.
yeah, whoever, and having a look at their information because that really shows you the details about the ETF. So most of them will have a fact sheet or a flyer or something like that that you can have a look at, which pretty much sums up all the key details that they want you to know about in one spot. So it's semi-marketing document, semi-informative, but it does give you a little bit of information in one spot if you want a condensed version of what you're reading on that page.
Are there any main facts that you should look out for?
A lot of the ones I've just covered is usually what's on the fact sheet and also holdings, which we'll mention in a second.
There's another thing that you can look out for in the PDS. So PDS is a legal document. So don't be afraid if it's like I'll click on this one here from A200. Don't be surprised if it's a little bit gross and there's a fair bit of fine print and stuff. When you look at it, they typically have like this section, see key features.
Yep.
And you can see it will tell you what it's trying to do, how it goes about doing it. It's a little bit blah, but then there's a risk section.
Okay.
So there's a risk section that are pretty common across everything. And then there'll be a section on tax.
Yeah.
And the tax section will just tell you basically like what you've got to do. It's not like specific to you, but it's just kind of general, like you'll pay tax on this and you'll pay tax on that.
Okay.
We won't go too far into the details, but another big thing is the fee information. Every PDS in Australia has to tell you, it has to give you an example of the fees.
Okay.
So on page 9 of the BetaShares one, you can see the example of the fees that they've given you.
Okay.
So it will show you if you invested 50 grand, how much would it cost you?
Right.
Yeah. And that's the good thing. But other than that, like the PDS is the legal document. That's one you always hear about in the news or on the TV. They're like, be sure to read the PDS available, blah, 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 and they speak really quick.
Yep.
Yeah, that's the legal one. But the fun flyer, as Kate mentioned, is like the highlights reel. And that's what we've done here. So Kate, top 10 holdings.
Yes. Okay. So also another thing you want to have a look at when you're comparing ETFs is what is actually in it. And we talked about how good ETFs are, that they're transparent and you know from the outset what's inside. And so you want to have a look at each of the websites and look for the word holdings. Now, it's going to be very similar when you look at most of these ETFs because they're all investing in large Australian companies. And there's a few large Australian companies that really stand out. So BHP is often, especially this year, nearly 10% of many of the top 200 like ETFs in Australia that invest in Australian companies. So you'll see names like BHP and Commonwealth Bank and CSL pop up in many of these ETFs, but it's a good way to just understand what you're actually investing in and how much is in some of the bigger companies.
Yeah,
Sure.
So can you see that here? You've got a table on both websites, and they're both at the 9th of September, so they're both comparing the same information, which is good. But you saw a minute ago, there was a bit of different information for one thing, and then this one's up to date, and that one's not up to date. So there will be minor differences because of the timing.
Okay.
But here we can see that BHP, Commonwealth Bank, in at number 3, CSL,
Yep.
National Australia Bank, and so on and so forth. Now, if we go to the same one for beta shares, you can see in exactly the same order are the companies.
Yep.
And you'd expect that because they do exactly the same thing.
So what's the difference exactly?
Well, that's it. So the difference is all of the things that we just looked at. Now, in this instance, as Kate said before, these ones do pretty much the same thing. But when you try and do it on something else, like if you went to, say, this one here, which is MVW. Now, I'm just going to bring this up on my screen here. If you're watching along, you'll be able to see this. When we look at this, they all ask you to do this like check to make sure you're a legitimate investor and whatever. But if you see here, there's a totally different list of names.
Okay.
So inside the MVW ETF, there's Pilbara or Pilbara Minerals, Car Sales, WiseTech, Altium. None of the names like BHP and that appear at the top.
Completely different.
It's completely different.
Yep.
So you could say that this ETF invests in different things to that one,
Yep.
even though they're both Australian shares ETFs.
Okay.
So then you might want to compare it and be like, well, actually, I want to keep it like everyone else and have that one. Or maybe I do want something different. I can add this one.
Right.
Yeah. But for our purposes, the A200 is almost identical to IOZ in terms of what it actually owns.
Okay.
Yeah. And so this is a really great list. So, I mean, if we just look at this, Kate, we can see here, they seem very similar.
Yeah, and some of them are almost identical. But the funny thing is, we all own a different one from this list.
Yeah.
Yeah.
Which is
And so
which goes to show there's no one right answer.
Okay.
Yeah.
So it's just a matter of choosing one, really.
Yeah, so sometimes this is like the old Heinz and SPC baked beans debate. At the end of the day, they kind of do the same thing. They're around about the same price. Just because you have one and I have a different one, maybe it doesn't matter too much.
Yeah.
Now, the thing to keep in mind here is like the VAS ETF from Vanguard is the biggest one in Australia. That's a little bit different because it's got 300 companies. As we just found out with the MVW one, the one from Van Eck, that's totally different to the others because it doesn't have as many companies and they're all in a different order.
Okay.
So those two are different. But
Yep.
the other three, they're kind of the same.
All right.
So then you would probably just say, well, they've all been around for a while. Let's just go with the lowest fee one.
Yeah.
Right? Makes sense.
Yeah.
It only starts to become a really big and interesting comparison when you start to do different things.
Okay.
So a good example would be thematic ETFs. Like if you compared the Hack ETF, which only invests in cybersecurity companies, and you compared that against ACDC, which is an ETF that invests in renewable energy.
Yep.
If you compared those two, one does cybersecurity, one does renewable energy, they're going to have completely different portfolios.
Right.
This would be like comparing all of the Turkish delights to all of the Moros. They're very different.
Yep.
So you're going to see very different numbers.
Completely different themes.
But if you think about it, if you were looking at those two things and you were like, I want growth, ACDC's grown this fast and Hack's grown this fast, maybe that one's better or this one's better.
Right.
So then you can start to see true differences.
Right.
With these ones here, they're very similar.
Yeah.
So yeah.
That makes sense. Yeah.
So when we say you've bought IOZ and we didn't recommend it, it doesn't really matter too much.
Yeah.
Because it's been around forever.
Yeah.
It's pretty low cost. It's got good performance. It's pretty big in terms of the amount of money it's invested. It pays a stable, yield, like distribution. I'll think of it like a dividend.
Yep.
Kind of invest in the same other stuff. I don't know, Kate, would you add anything else?
Yeah, I think at the end of the day, when you're looking at the core ETF, there are a lot of similarities. And as you go further out from the core, they become more and more different. But really the most important thing is you pick something.
Yeah.
Which is, especially for your
Yeah.
core portfolio, just to get started, you've gone through, you're comfortable, you understand the details. You pick one of these if you are interested in Australian shares ETFs to get started with. And if you're starting with $500, then you can change your mind down the track if for some reason you find a reason that you really want to invest in a different one. But it is a good idea to just work through this list, and this gives you a way to get a feel of all the different providers' websites and all the different things you might compare for and some of those key details there. And the time you look at a PDS, you'll probably be getting a bit lost because there's a lot in there, and most people don't read a PDS. A few people have told me after listening to some of our other episodes that they have gone through and read one. I think it's some good nighttime reading. It definitely is jargon heavy and very legal jargon heavy, but it is a good way to really understand how the product works if you use that as a point to actually do further research, because you go, I don't know what that word is, I'm going to research that.
Yeah.
So there's a lot that you can do, and I think this is one of those things where learning by doing is okay.
Yeah.
Yeah. So if you're listening to this and you think you're a bit lost through that, jump on the YouTube channel, have a look at the video, and it will guide you through. And then in the next episode, Kate, we'll look at, now we've chosen one.
Yeah.
How do we use it? Do I need to do anything? And then all of those kind of admin details, right?
Yeah. So really getting to know which ETF you picked and how to keep moving on with that and how to put it in your portfolio. And so definitely have a look at our Google Docs so you can work through this research activity yourself and have a look at comparing A200, STW, IOZ, VAS and MVW as a great starting exercise if you've never researched ETFs before.
Yep, cool. And if you want to find out more information, you can head to the Rask Education website, take our ETF investing course. You can also just listen to the back catalogue. If you haven't already listened to episodes 1 or 2, please do that. And you'll find the videos in the show notes, but also you can just head to the Rask YouTube channel. So, Kate, that was a really good description of how to analyze an ETF. Love it. Monique, really good role playing as a student.
Anytime.
No, it's great. So, ladies, thanks for joining me.
Thanks for listening, everyone.